Hey, hello and welcome everyone. Thank you very much for joining us here for this installment of the Chinese Business History webinar here at the Hong Kong Institute for the Humanities and Social Sciences at the University of Hong Kong. I'm Ghassan Moazin, an assistant professor here at the Institute, and I'm also joined by my colleague Dr. John Wong, also at the Institute, of course. Today we're very happy and glad to welcome to the Business History webinar Dr. Dan Du. Dr. Du is Assistant Professor of History at the University of North Carolina at Charlotte, and she is currently working on a book manuscript titled called This World in a Teacup, Chinese-American Tea Trade in the 19th Century, which we are, I think, all looking forward very much to reading. And she's kindly agreed to talk to us today about a part of that research, and that is the financing of Chinese-American tea trade. Her paper that she's going to present today is entitled Green Gold and Paper Gold, Financing the Chinese-American Tea Trade Before the Opium War. Now, before I hand things over to Dr. Du, I should just briefly talk a bit about the format of the talk. So Dan is going to talk for roughly half an hour, and then we have roughly 30 minutes for question and answers. If either during the talk or during the Q&A period you have any questions for Dr. Du, please submit them through the Q&A button, and I will then read them out during the Q&A period we have, and Dr. Du can then reply and answer your question. So feel free, we're monitoring the Q&As throughout the talk, so feel free to submit questions at any time. But without taking up any more time, I should hand over things to you, Dan, now. So if you're ready, please feel free to get started.
Okay, sure. Okay, so is it working?
Yes, it looks very good.
Okay, great. So thank you, Dr. Moazin, for your introduction. And I really want to thank Dr. Moazin and Dr. Wang for holding this event. And it's a great pleasure to be here. I gave the talk about the topic to some scholars in the field of European or American business history and financial history, but never to colleagues in the field of Chinese business history. So this is a very precious chance for me, and I look forward to your questions after my presentation. So what I want to talk about today is from the second and third chapters of my current book project on the Chinese-American tea trade in the 19th century. So in this talk, I will focus on silver and credit to revisit a very important topic in Chinese history, business history, that is silver, or the silverized Chinese economy, whether this economy or the important role of silver created a cumbersome or even primitive trading system in China. So this is the question I hope I can answer through this talk. So this whole book is driven by a very simple question. That is, how did Americans pay for Chinese tea? Because I guess everyone knows about the British. In order to buy tea from China, but in order to save some silver, the British eventually chose to smuggle opium into China and eventually triggered the first Opium War. This is a well-known story in world history. But how about Americans? Because the United States was the second largest importer of tea from China back to the 19th century. And also from the data, we can see the importance of tea in the China-US trade. So the China-US tea trade started in 1784. Well, after that, we can see tea became the most important commodity for American merchants. So they imported so much tea from China. So how did their their means of payment should play a very important role, as important as the British. Well, the most convenient answer to my question should be silver, because we all know silver was the primary currency of the minting China back to that time. And especially after Andrew Gander Frank's book, Reorient, comes out, many people agrees that China was the world silver center back to the that time from the 16th century. However, China didn't produce much silver. We can see here the major producers of silver were in South America or Japan. So before Americans came to the China trade, most silver came from Japan. But after 1784, after Americans entered the tea trade, the United States, represented by the green line here, became the primary supplier of silver from South America to China. So it was very natural to think about their major means of payment was silver, and also because the silver, silver became a very traditional answer to many questions, and even produced this image or even bias of a cumbersome trading system. Like Thomas Benton said in 1843, well, the China trade was conducted on a very simple and elementary principle. That is, here is one and there is the other, or ready money or hard money like silver, or products. There is no credit, no paper money. Well, modern scholars repeated this bias. Like in this book, the author said, well, throughout China's long history, the credit structure of China has remained underdeveloped, and credit for productive purposes was not very important for Chinese, even in modern times. And butter and coins, hard money, were more important to the Chinese. So silver and a cumbersome trading system became like a very standard answer to my question. However, in my research, I found it was, although the United States was the largest supplier of silver to China, it was very hard for individual Americans, merchants, to get silver. So the 19th century correspondence between American merchants were filled with the anxieties about getting silver. Moreover, sometimes they even had to pay gold to buy silver. Not to mention, to ship silver to China, these merchants also needed to pay insurance, to pay commission fees, to pay for their transportation, to pay for many types of other fees in the China trade. Like this one, this merchant shipped $6,000 silver dollars to China, but the total cost was $6,160. So the extra cost was about 2%. So when we think about millions of dollars flowing into China, this would be a very costly and very cumbersome system. However, fortunately to Americans back to that time and Chinese back to that time, they had credit to help them to facilitate the de facto transactions. Credit means when tea or other commodities were delivered, silver was not delivered at the same time. It will be delivered later. So so silver was not the means of payment for de facto transactions, for each transactions, because of the existence of account sales and credit instruments. So this is an account book kept by Henry Hollingsworth, a captain working for a Philadelphia tea importer in the early 19th century. So in his account book, on this odd page, he recorded all the payments he made. On the other page, he recorded all the payments. This was the payments he received. Well, this was the payments he made. I transcribed all the payments he made to other traders in China. Many of them we can see were Chinese merchants. Most of these transactions were paid on account, which means when they purchased something like Chinaware or tea from these Chinese merchants, they didn't pay silver at the spot. Instead, they just put the amount in the account book, and sometime later, maybe during the Chinese New Year, they shipped silver to China just to clear the balance. Therefore, silver was not the means of payment for each transaction, but most of the times for to clear the balance. Moreover, here in this account book, we can see the entry here. This entry about his payment, his paying interest on a note, indicate the existence of credit instruments or negotiable instruments. So the two major types of credit instruments included promissory notes and bills of exchange. So here we can see Hollingsworth mentioned a note. This note should be a promissory note. Well, promissory notes, bills of exchange, and checks were considered as the three types of negotiable instruments. But this was in the English and American legal framework. But in the continental European legal framework, only bills of exchange and promissory notes were considered as negotiable instruments, while checks were not. Well, I don't want to waste your time on the technical terms, so let's just focus on promissory notes and bills of exchange in the China trade, the two major types of credit instruments. So here, what is a promissory note? This is a promissory note I found from the Historical Society of Pennsylvania. This is related to the China trade because we can see the Chinese characters here. Well, in this promissory note, two American merchants, William Shaler and Richard Cleveland, promised to pay Consigua. This is a Chinese merchant, promised to pay Consigua on $7,900. If they couldn't pay this amount of money in 12 months, they would pay interest on this note. So at the end of this transaction or this debt relationship, we can see the final amount was $7,494, which means they paid after the note expired. So from this, we can see a promissory note is a written promise to pay someone in the future. It's just like a formal form of IOUs, or in Chinese, 欠条, just a formal form of 欠条. But this was used a lot in the Chinese-American tea trade. Well, this one was Consigua, the one who owned this note. Well, this may be the only portrait we can find about this wealthy Chinese merchant. He was very well known for being very wealthy, for trading a lot with Americans more than any other members. And he was very wealthy and very easy to make contracts. Moreover, this American merchant noticed he was unbounded in his promises of credit, which means he gave lots of promissory notes to his American friends, like William Reed in this letter. So on this one single day, on December the 12th, 1805, he issued or gave about 6 promissory notes to William Reed. The total amount was over $31,000 back to that time, while the value would be over $1 billion in 2020. So this is a lot. Well, through the China-U.S. trade, in the first several decades until 1817, he issued about $632,000 to his American friends through promissory notes, while the value would be over $17 billion in 2020. So this is a huge amount of credit, but this was only an incomplete tabulation of the notes he issued to his American trading partners. Because of his influence, Consigua's notes was preferred by American merchants. Some of them even used his notes to pay other American merchants in China. So Consigua's notes were considered as good as cash, or sometimes they remitted Consigua's notes in preference to dollars, to cash. So this shows the influence and large scale of the promissory notes issued by Consigua. But Consigua was not the only Chinese merchant who did this. Well, we found some records about other Chinese merchants giving promissory notes to their American trading partners, because in the early 19th century, some conflicts between the United States and Europe, especially Great Britain, took place. So President Jefferson placed an embargo on American foreign trade during the early decades of the 19th century, which means Americans couldn't ship their silver to China to clear the account balance or to pay their promissory notes to these Chinese merchants. So many Chinese sued them in American courts. Well, in addition to Consigua, a dozen other Chinese merchants also sued them. So from this single case of Consigua and other Chinese merchants, we can imagine how large the size of promissory notes were used in the China trade. Well, Consigua didn't get money back from the lawsuits in the US, so he even wrote a letter to President James Madison, pressuring him or asking his help to request the repayment of his debts or his notes, but he failed. But through this case of promissory notes, I just want to show how the important role of credit played in the China trade. So the trading system, at least in the China-US tea trade, was not so cumbersome, so clumsy, so primitive. Well, this is promissory note. The other important credit instrument was bills of exchange. This may be more important. So what is a bill of exchange? So here is one I can find, the only one that I can find relating to the China trade. So in this bill of exchange, we can see a merchant in Boston. He told a company in Canton, President de Guangzhou, to pay another company in Hong Kong. Well, we can see from this bill of exchange, it involves three parties in this debt relationship. And also it involves payments in different locations. This is the feature of a bill of exchange. It was different from a promissory note, which involves only two parties in the debt relationship. I'm not sure how many of you use the checks. So a bill of exchange is very similar to a check today. Well, in the US, people use check a lot, but bills of exchange were used a lot in the international trade because it could be used in different locations. Well, a bill of exchange was also a negotiable instrument, which means it could be resold to others. In addition to the three parties, it could be resold to others. Like this one on the reverse, on the back of this bill of exchange, we can tell a Chinese merchant bought it because we can see the Chinese characters here. Moreover, the Chinese merchant translated the value of this bill, $844.62 into Chinese. This Arabic numeral system was translated into Suzhou code, Suzhou Ma, the Chinese commercial numeral system. Well, actually, in addition to the translations here, actually, bills of exchange are not unfamiliar to many Chinese. Chinese are no strangers to the use of bills of exchange because in Chinese history, another type of, the Chinese form of bills of exchange were used a lot during the Tang Dynasty. That was the flying cash, which was considered as the origin of paper money. So how did flying cash worked? Here, we know, like during the Tang period, if a merchant wanted to remit some money back to his hometown, he didn't have to carry the coins. Instead, he could deposit the coins with Jinzhou Yuan in the capital city. The Jinzhou Yuan would give him a receipt, a paper receipt. So the merchant would have half of this receipt, while the Jinzhou Yuan mailed the other half of the receipt to his local government. So after the merchant went back to his hometown, if the two parts, the two halves of the receipt matches, he could get coins from the local government. So in this way, coins fly, cash flew. So he didn't have to ship coins back to his hometown. Well, so bills of exchange functioned in the same way. Well, like a Chinese scholar during the Republican period explained, flying cash was the bills of exchange today. 合券之前, like the two halves matches, that's the Chinese bills of exchange. Why was a bill of exchange so important to the China-US trade back to that time? Because bills of exchange became the primary medium of purchasing tea for the United States. But the bill of exchange back to that time to Americans was not the Chinese flying cash, but the bill of exchange upon England, or exchange upon England, or bills upon England. All of them mean the same thing, bills of exchange upon England. And also, the other means of payment was cotton goods. Well, and also, these credit instruments produced a very sophisticated triangular trade between China, the United States, and England, because the price of bills of exchange in China depends on the condition of the opium trade in China. Well, the price of cotton goods depended on the cost of raw cotton in the United States. This may sound complicated, but I will explain it in detail. So actually, Chinese merchants and American merchants, like Chinese merchants like Consigua and American merchants like Wang in this letter, they started to use bills of exchange in the early 19th century, in 1813. However, the large scale of bills of exchange introduced into China started from the late 1820s, like this chart shows. So why the late 1820th, especially from 1826? It was because of the opium trade. So opium smuggling was not thriving at the very beginning, but the value of opium smuggled or introduced into China started to climb from 1826. So after that, this thriving opium trade produced a problem for British and Indian merchants, because after they sold opium to China, they had lots of money, their proceeds to remit to return to their hometown in London or India. But it was very hard for them to carry silver, or sometimes it was impossible because the East India Company required them to deposit their silver with them. So what did they do? They just bought lots of bills of exchange, these papers, to remit their silver or their proceeds back to London and India. Well, this produced a chance for Americans, because before the early 19th century, the only bills available to these merchants were issued by the East India Company. But after the thriving opium trade started, Americans introduced new bills into China. This was called the private bills, because they were not issued by the East India Company. These bills gave Americans a good chance to make money in China. So how did Americans get the bills? It was because of the transatlantic cotton trade. We can see from this chart, from 1826, the United States became the primary supplier of raw cotton to Great Britain. So in this transatlantic cotton trade, Americans got lots of bills of exchange on London from their English trading partners. And then after that, they introduced the bills of exchange on London to China. So these British and Indian merchants purchased their bills and then used the bills to remit their proceeds back to India and London. In this way, this produced a very sophisticated triangular trade between China, the United States, and Great Britain. That's why Gideon Nye said, well, the major means of payment for tea that Americans used was bills of exchange upon England and cotton goods, while the rate of bills depended on the condition of the opium trade. Well, cotton goods was important too, because after in the early 19th century, Americans started to import cotton goods like a textile from Great Britain and then the United States itself to China. Well, so in this way, bills of exchange also played a very important role, and also the triangular trade network was formed. So what I want to emphasize is Chinese merchants also played a very important role in this bill trade, because for Americans in Asia, it was very hard for many of them to sell their bills, because even some very famous merchants like Perkins, like Bryant and Sturgis and J.P. Cushing from Boston, even though they were very famous merchants, they were all of the first standing for respectability and wealth. They were little known. They were known to very few people in Bombay, India. So it was hard for them to sell the bills. Well, that's why they obtained the endorsement of Haogua, or the support of Haogua on their bills. Well, Haogua, Wu Bingjian, was very famous, and he was well known throughout India. So after his endorsement, his bills were not only as good in reality, but as valuable in the Indian market as a government bill or any other types of bills. That's why the Chinese played a very important role in facilitating the bill trade. Well, so in this way, Americans didn't have to ship silver to China to pay for tea or to clear their account balance, but they could sell bills of exchange in silver, sell bills of exchange in Asia to get silver. That's why after the 1820s, the shipments of silver to China dropped, plummeted, but the introduction of bills of exchange to China increased a lot. So what was the consequence? The consequence was tremendous on both the United States and China. So this on the U.S. side, this bill trade and the reduction of shipments of silver to China inflated the U.S. economy and eventually caused the panic of 1837. So from this chart, we can see before the 1820s, most of the silver flowing to the United States were shipped to China. But after the 1820s, the silver shipped to China plummeted, but silver continued to flow into the US. This increased the stock of silver in the US. So for a long time, Spanish dollars or silver was also the legal tender in the United States. So this means the Americans had more and more money in their economy. So this inflation in the economy caused the panic of 1837. Well, this is not my argument. Actually, this was an argument brought up by an economist, Peter Taman, in 1969. He argued, many historians argue the panic of 1837, which was a financial depression, an economic depression, a financial panic in the United States, was caused by the bank war between President Jackson and the president of the Bank of the United States. However, Taman argued, the bill trade in China and India actually played a more important role, because the reduction of silver shipments to China inflated the American economy and eventually caused speculation, caused the panic of 1837. This was the impact on the US economy. Well, the impact on China was just to the contrary, because this produced more silver drain on China. We can see here from this chart, the United States was the largest supplier of silver to China. But after the 1820s, the silver flowing into China plummeted, reduced a lot. However, silver continued to flow out of China because of the opium trade. So we can see the widening gap here, which means China lost more and more silver. China didn't have much silver anymore. So many scholars have done research on the higher and higher prices of silver before the Opium War. Maybe this was a reason. And also we can see many wealthy Chinese merchants, like the Han merchants, they owed lots of silver to the government. Like in 1839, before the Opium War broke out, they owed about 1 million taels to the government. That was about $57 million today. So although these merchants, maybe they had lots of bills, but because there was not much silver, it was very hard for them to sell the bills to get silver and then pay the fees to the government, or it was very expensive for them to do that. So this bankrupted actually two very famous Han merchants. Well, I didn't find any evidence about Chinese officials' awareness of this bill trade, but many of them paid attention to the opium trade because opium accelerated the silver gene on China. So we know Emperor Daoguang and many other officials started to launch very strict ban on the opium trade, which eventually led to the Opium War. But like Peter Taman said, maybe they panic of 1837 or the inflation of American economy was very closely connected to the Opium War in China, just through the function of silver and credit. Well, through this history, I also want to reconsider or argue against this idea that China's trading system was very primitive, was very cumbersome, because we have large number of promissory notes and bills of exchange, which caused lots of lawsuits between Chinese and Americans, and even caused the Panic of 1837 and the Opium War. So that's it, and I look forward to your questions and feedback. Thank you.
Yeah, Dan, thank you so much for this wonderful talk. I think so many interesting facets of the whole financial networks that you described. That it's really fascinating. Before we dive into the Q&A, I should briefly mention that this talk is also, and I forgot to mention it at the start, this talk is also cross-listed with a new project rather that we have at the Institute, the Hong Kong Institute for the Humanities and Social Sciences, called Delta on the Move, and that is on the historical development of the Greater Bay Area. And Dr. John Wong, who is with us today as well, as I mentioned, is the lead researcher here, and of course Dan's research fits into that wonderfully, because she really shows how the Greater Bay Area, or its historical precedents rather, have for such a long time been a focal point for financial flows in this case. But now I don't want to waste any more time. We already have the first few questions. So our first question comes from Martin Hayes. So he says, thank you for your presentation. My question is, why did the Chinese choose silver as the mode of transaction as opposed to, for example, gold? I've read somewhere that for centuries before the period which you are talking about, Chinese traders from Fujian province in the Philippines were being paid by the Spanish in silver from South American Spanish colonies for Chinese goods, so for example, tea. The Chinese therefore knew and moreover trusted silver from South America. Would you agree with that comment?
Okay, thank you, Martin, for that. For these two questions. These are very good questions. I totally agree. So first, why did the Chinese trust silver so much or choose silver? I'm not an expert on this history, because I think it goes back to the Yuan dynasty or even Song dynasty. I think the use of silver, the use of silver in Chinese history actually started from the Yuan, from the Mongols. According to what I read, this was a tradition of the Silk Road. We know China didn't produce much silver. So before the Yuan dynasty, although in the Song dynasty, I think silver was used, but after the Mongols came to dominate silver, they brought this tradition of using silver to China. Well, this tradition was, I think this was a Persian tradition in the Middle East. They used lots of silver. So this was brought to China, and then people started to use silver a lot, and this became a habit, like a norm in the trade. That's what I know. But we know, like in the Ming period, and also paper money was used a lot also in the Yuan period. But during the Ming period, because of the inflation, the Ming emperor just abolished paper money, and then silver became the primary currency of China. So that's why during the Ming-Qing period, the Chinese just chose silver, but it was not originally, it was not a Chinese tradition. And this was the influence of the Silk Road. That's what I know. But I know many scholars are doing research on silver. So I guess they can give more details about this to us. Well, second, about the Chinese Chinese trusting silver, I totally agree, according to what I know. And I know Chinese not only trusted silver, they especially trusted silver from a certain area or a certain region that was called the Spanish silver, right? Spanish dollars. Well, this was coined during some time, which I cannot remember very clearly, during the Spanish monarch's rule. Well, these Spanish dollars were considered as kind of like a legal tender for the Chinese merchants during the 19th century. Although other dollars, silver dollars, like for Mexican silver dollars and later American US silver dollars were better than these Spanish dollars, but the Chinese chose to trust Spanish silver a lot. And this caused a lot of problem to the China-US trade as well. So that's what I read about. So hope it answers your questions.
Yeah, thank you very much. The next question comes from Zhang Meng, and she says, "Good to see you here, Dan. For clarification, when you say Consequa, quote unquote, gave or issued promissory notes to an American X is indebted to Consequa, correct? Why would such notes, which denoted a random person's indebtedness to Consequa, be as good as cash? In other words, how would such notes reflect the good credibility of Consequa? Or did I understand it wrong? Was that relationship the other way around?"
Mm-hmm. Yeah, Meng, good to see you here too. These are very good questions. Again, these are very good questions. So first, when I said give or issued, because I didn't have time to explain the terms, the technical terms about promissory notes. So when people issue a promissory note, people usually say they wrote a note. But when people issued bills of exchange, bills were drawn by them. So these are just the technical terms. So I just use give and issued interchangeably. So that's why I said that. I hope that this answers your question. And also, I don't think these are random persons. Actually, this is a very good question that I really hope I can elaborate in my book, but I don't think I have enough information. But to put it simply, these were not random people. They traded a lot with Consequa, like William Reed. So they kind of forged a friendship or trust relationship between them. So these merchants I mentioned, like William Reed, like Cleveland and Clark, who used Consequa's note to pay other American merchants. They traded for a long time. That's why the Consequa's notes could be so influential, could be so trustworthy to many American merchants. That's why in the data I got, there were, or I didn't find any promissory notes used before 1790s, which means, the China-US trade started in 1784. So that means maybe in the first decade of the China-U.S. trade, the trust relationship was not formed yet. So we couldn't find much information about promissory notes. But after that, a lot of records just appeared. About the use of promissory notes. That's why I think this reflected the credibility of Consigua because of time proved that they could trade for a long time. So hope that answers your question.
Yeah, thank you.
And also, Dr. Wang's book about Haogua may be a good example how Haogua and his American friends trusted each other. So I found lots of information about Haogua's notes as well, promissory notes.
Yeah, thank you. The next question comes from Mark Levinson, and he says, when I studied the tea trade within the United States in the 1850s, I learned that there were frequent complaints that the tea delivered was not of the quality or variety promised. There must have been similar complaints about imports from China and cases in which importers refused to pay, alleging fraud or misrepresentation. What options did Chinese exporters have in such cases?
Thank you, Mark. And this is a very good one because this is the question I'm examining, I'm thinking about today. So this is a very common problem to the China trade. And eventually the Chinese exporters didn't have any options. They just kind of gave up. Like you said, especially after the 1850s, Chinese tea or American importers and British importers complained about Chinese tea a lot as well. Like we know, when they bought tea from China, usually Chinese merchants send them some masters or some samples. Well, because of the large number of tea chests, well, these importers couldn't check each chest. So sometimes they complained that the samples or the tea they got didn't match the samples. The tea they got were inferior. This was not the major problem. More importantly, British and American importers complained about fake tea from China, like how the Chinese colored their green tea, or they mixed their tea with other leaves or even some old teas. This became the major problem to the China trade, especially after the 1870s when India and Japan teas, like black teas from India and Sri Lanka, and green tea from Japan became more and more popular in the United States and in Great Britain. And also some British and Japanese companies used this to advertise against the Chinese. So in this case, Chinese, eventually, they didn't have any option. They didn't have any way to solve this problem. So the Chinese tea trade just declined after the 1870s. Especially with Great Britain, after the 20th century with the United States. And even today, when some people here in the United States talked about Chinese green tea, they mentioned, well, the Chinese colored their tea. But this was not true in all cases because some tea, like Pingshui, Zhucha, they were colored, but the teas produced in Wuyuan, they were better quality. Some of them, or most of them, were not colored. But anyway, these details are maybe not so important to many people complained about the Chinese tea. And also, like Consigua, I mentioned, when Consigua sued his American trading partners in the United States, some American merchants countersued him, arguing that his tea was not very good because they couldn't sell the tea at a very reasonable price. So by using that, some American, not all, some American merchants used that to refuse to pay Consigua. This was what happened in the tea trade as well. So by using the quality issue to solve the debt problem. So hope this answers your question.
Yeah, thank you, Dan. Next question comes from Chers Chan, and the question is simply, why were the Chinese merchants willing to accept promissory notes in the first place?
Yeah, thank you for your question, Terrace. I think the most important role to them was giving or issuing promissory notes instead of accepting promissory notes. This is the question actually about the role of silver in the China trade. Again, silver was very important. We need silver to settle the payments, to settle the debts, to pay the fees. However, silver was not available all the time. So when silver or cash was not available, but people still wanted to trade with each other, they need some other instruments to facilitate the trade, like just write you an IOU, write you a promissory note to show you I will pay you back in the future. So this promise helped them to carry on the tea trade, although they didn't have silver in hand back to that time. That's why Chinese and American merchants were willing to use promissory notes, either accepting them or issuing them or transferring them to each other.
Yeah, thank you. The next question comes from our colleague, Dr. Wang Luman. And she says, Dr. Du, thank you very much for the great talk. I wonder how the American businessmen paid Chinese merchants, for example, the types of paper money, how that changed after the Opium Wars, especially after the institutionalization of the new global trade order after the 1860s.
Thank you so much, Dr. Wang, for the question. Actually, this is the question I'm looking for answers to. I just found a little information about this. So like you said, yes, after the 1860s, especially after the 1870s, foreign banks arose in China. So especially the Hong Kong and Shanghai Bank. So in the 1880s in the 1880s, some Chinese started to accept paper money from them in their trade, but I didn't find much information about other banks. So actually, this I want to argue this shows the financialization of the tea trade after the institutionalization or after the institution of the global trade changed after the 1860s. So the rise of financial capitalism or financial imperialism, which term you want to use, so really impact the rise of financial capitalism affected China. So banks played a more and more important role. So like promissory notes and bills of exchange were used a lot by merchants before the 1870s or 1850s. Or before the Opium War, but after 1860s, 1870s, banks play a more important role in issuing promissory notes, and bills of exchange, and even paper money to finance the tea trade. But still, I need to look for more information about this. And if you know any information about the use of paper money in the China-US trade, please let me know.
Yeah, I'm just thinking about this as well, but I've also not heard of paper money issued by foreign banks being used in the tea trade, at least particularly. So I haven't come across it either, I have to say. But it'll be interesting to know more about that.
Me too.
Yeah, thank you. The next question comes from Scott Abel, and he says, for the panic of 1837, there seems to have been a panic in Singapore in around 1836 with a credit crisis. Merchants were unable to make specie payments on credit, thereby causing a large economic crisis. Have you seen evidence of an origin or spread of the financial crisis in China or elsewhere besides the US?
Thank you, Scott, for the information. That's fascinating. I'm thinking about the letters I read about Americans and their Chinese trading partners. Maybe very possibly this was a consequence of the panic of 1837, or this was an indication of the upcoming panic of 1837, because American merchants, they also bought and sold bills of exchange on London in Southeast Asia, like in Batavia, Singapore too, I think, Java, like these places. So, and also, Chinese merchants traded a lot there as well. So maybe their bill trade between Chinese and American merchants also impacted the trade in Singapore. And also maybe this one is not so related, but I read many letters about the tea trade between American merchants in Singapore and American merchants in the United States and China. So there was a very complicated financial and commercial network linking these places. But we just need more information about them and more research on them. But this is fascinating. I hope you can give me the answer in the future. If I see any information about that, I will let you know.
Thank you. The next question comes from our colleague James Victor. And he says, thank you for your talk. Do you think that interest rates on bills of exchange in China can be reliably calculated at all? A few other clarifications. North American bills on London grew during the 1800s cotton boom, but date back to the early 1700s as a result of the North American colonial trade relationship and plantation economies of that period. It might be too much to yoke it to the antebellum cotton boom. Also, I wonder why risk linking to Temin's argument. That argument implies a silver oversupply in the US causing the 1837 crisis there. This is a measurable thing, but also very contentious. There's a risk that the significance of your argument gets reduced in readers' eyes if its validity appears linked to their understanding of the 1837 banking crisis, where most readers will not agree with Temin but see the bank war as a larger cause. Is this historiographic overreach? So I wonder whether you might have any comment on that.
Well, that's a lot to respond. Thank you, James, for your comments, and also I want to take this chance to thank you for all of your comments before this talk. So these comments are very useful as well. So first about the cotton boom, and again, I'm not an expert on it. When I talk about the cotton boom, because I focus on the question how Americans got the bills of exchange, and then I saw the charts. Yes, Americans used the bills of exchange for a long time before they entered the China trade, but after 1826. Or after the War of 1812, they introduced the bills of exchange to China. That's why bills of exchange became very important in the China trade. And also, I read an argument, which I'm not sure whether that's true or not. You may tell me. The argument was that Americans didn't have bills of exchange by themselves. They didn't issue bills of exchange, but they used lots of bills of exchange upon England to in their foreign trade. So that's why I think I talk about the cotton boom. I don't think it relates much to antebellum cotton boom or anything else. I just want to show the data I got. So I hope after reading others' comments and after reading your comments and doing more research, I can have a clearer idea about this. But I don't think I can put it in my book because cotton is not the focus of my book, and tea and silver and bills of exchange are already a lot. And also about Peter Temin's book. Actually, I just came across it by chance. I just got this idea about the importance of bills of exchange in the Chinese economy. But someday I came across a book review on Peter Temin's book. So it mentions, he already mentions the argument that I want to make. Silver was reduced, silver shipments to China was reduced a lot. And this cost a lot of economic, it had lots of economic impacts on China. So, and his book mentions the other side of the story. That's why I just mentioned his book to back up my argument. I'm not sure how many people will buy my argument, or maybe this will backfire. For those people who don't like Peter Temin's argument, they don't like but I don't think that's a historiography thing. Is just the argument I found relating to my argument, so I put it there. But I will think more about it when I finish up my manuscript. So we'll see whether I will mention Temin again or not, but I guess I will, because it is so closely related to my arguments. Thank you for your comments. I will think about them.
Oh, sorry, you couldn't hear me right. Yeah, no.
Yeah.
Sorry. So the next question comes from Jen Feng, and it says, I would like to know, besides trust-based credit money that you have mentioned throughout the trade between the US and China, were there any other forms of legal regulations backing up their use of promissory notes or credit in general? For example, punishment if they can't repay the debt.
Yeah, thank you for your question. Actually, that's a very important one, which I didn't find an answer to. So I will do more research in the future about this was about the different institutional environment and the different institutional environments of credit instruments. I didn't find any evidence about how the Chinese regulated the use of promissory notes. I know after 1914, or I'm not sure whether the time is correct, but in the early 20th century, China passed the first law of negotiable instruments. But this was an impact from the West, and they borrowed this law from Japan, actually from Germany. So this was the only information that I know about how the use of the legal regulations of credit instruments. But I will look for more information about it. But in the U.S., on the U.S. side, or on the Western side, like the Negotiable Instruments Act passed by in India, actually passed by British authorities, they showed how the Western world regulated the use of credit instruments. And modern finance, the terms we are using today, like credit, like promissory notes, bills of exchange, I think are the Western tradition, because flying cash or hundi, like the term for Indian bills of exchange and promissory notes, and like suftadas for the Islamic empire, they were not used anymore. So I know the Western context, they had lots of legal regulations, but I'm not sure about China. But this is a very good question, which I want to do more research in the future after I finish this book. Yeah, especially about the 19th century. So thank you so much for the question.
Yeah, thank you. Another question we have comes from Jia Inshu, and the question is, or the comment, many thanks for your great presentation, Dr. Du. You speak of basing promissory notes on silver. Were there also notes that refer directly to tea in terms of quality and quantity as a basis of value, and then translated by an exchange rate to silver, or is silver always the way to define the value of tea? That is silver's value defined by the tea, or is tea's value defined by silver?
Yeah, thank you for your question. That's a very, very good one. It's like a philosophical question. Yeah. First, I know tea because tea was a very expensive commodity. So some places use the tea as a currency, right? Like if I remember correctly, in Mongolia or in some places in Russia, they use the tea as a basis of value. Well, in this China tea trade, between the Chinese and Americans, I didn't see such kind of evidence. But I know like sometimes opium was used as a basis of value, as a means of payment to exchange for Chinese tea. Translating exchange rate to silver and tea, I didn't see the information about that, maybe, but such information is, I guess, very hard to find in the business records. But this is a very good point. I will keep that in mind. But I know the exchange of rate in China was determined by the tea trade, because when tea and silk, actually, when new tea came to the market, the exchange of rate usually rose a lot. And then when the tea season ended in April or March, and the exchange of rate, the rate of bills of exchange and the rate of all kinds of money actually declined a little bit, especially in Shanghai. That's what I read about. And also the other question is a very good one. So is silver's value defined by tea or tea's value defined by silver? Maybe both. This is especially related to the decline of the China-US tea trade in the late 19th century. Because I can see after 1873, the price of tea or the value of tea dropped by half. Like they dropped by 50%. But the amount of tea exported to the United States continued to rise. That means when the Chinese exported more tea, they couldn't get enough, they couldn't get as much silver back. So the value of tea actually, because it was defined by silver, deflated, decreased. A reason for this, one maybe because of the Chinese, the quality of Chinese tea became inferior, so they couldn't command such a high price. But the other reason is because of the gold standard. We know after the 1870s, right? If I remember this correctly. So the United States also adopted the gold standard after Germany and the Great Britain in the 1820s. So silver as a currency, as a precious metal, became cheaper and cheaper. So when tea, the value of tea was defined by silver, the value of tea also dropped a lot in the 1870s. I want to argue this was a feature of the decline of the China-US tea trade. It's not like the decline of the China-British tea trade. The absolute quantities of tea exported to Great Britain declined. But for the United States, the amount of tea exported increased, but the value decreased because of the value of silver. So I'm not sure whether this answers your question, but this is a very good question. Thank you.
Yeah, thanks for the presentation. I'm just so glad to hear about all these people I actually had dreams about for quite a few years of my life. I have a question about this whole business of silver. The way you're presenting it, silver is an unit of account, in today's language, a functional currency of sort. So you prepare your account books with that as your unit. But then the various instruments you're talking about, they're not created equal. Paper money, they don't carry interest. Bills of exchange, they might. And when you trade them, there's usually a discount or premium attached to it. I guess it's related to some of the questions that you've been asked. So do you, in your research, when you look at these documents, do you see much about the discount and the premium at which these instruments were traded? I mean, $1 in London 3 months from now is quite different from $1 with me today. And I'm sure Hopa was not quite signing or endorsing those instruments for free. So I wonder if you have found something about the fees he charged for it to give us some ideas about basically the credit spreads among the various people. Or, or to even push it a step further, I wonder about that in my own days of doing research on this period. I wonder if certain traders were not actually thinking about silver as an accounting unit, but a commodity that they traded anyway. So have you noticed, say, in some of the Chinese account books, whether they prepare their accounts differently, maybe on a different basis?
All right, so thank you for your question, John. Your questions, actually, these are very important questions. I'm not sure I have the answers for you, so I can just talk about what I read about. So first, yes, silver was the unit of account, but actually the instruments solved this problem of different standards of silver that the Chinese used. Yes, and also because these the bills of exchange and promissory notes, they were basically just pieces of paper. They were discounted at different rates. I'm not sure about the rate of Consigua's promissory notes because there was not a market for his notes. I only read some letters about how American used his notes. But for bills of exchange, there was a market for the bills of exchange. So you can find the price current about the price, the rates of bills of exchange. For England, like I mentioned, when tea came to the market, the bills of exchange on London rose a lot. Or like when they when I remember there was a financial depression, right? A panic of 1865 broke out, and then the rates of bills of exchange on London just dropped. And also during the period of the panic of 1837, like this. And after the Opium War, bills on France, some French bills also were introduced to Shanghai and Hong Kong. I didn't pay attention to the differences between the bills of exchange on England and bills on France, but I guess there was a difference in their prices. So like the market reports, I will look for more information from them. They should give us some information about the different rates of the bills. And also silver as a commodity, like you said, yes. And silver was a commodity, but I didn't find much information on the Chinese side. I found lots of information on the American side. They talked about how to think about silver as a commodity when you do the tea trade in China, because like a merchant, Samuel Hooper, he mentioned many Americans didn't think about this question at all, but you have to think about the different ports in China. In different ports, silver had different prices, like the Spanish dollars, they usually got a premium. They were very expensive, very valuable. But for Mexican dollars, they were discounted at maybe 12%. So you have to think about the different prices of silver in different treaty ports in China when you do the tea trade. Because in Shanghai, you may use less silver to buy more tea, like that. So that's on the American side, and their account books recorded like the Spanish dollars or Mexican dollars they used, and the rate of exchange. Oh, and also the rate of bills of exchange. But I didn't find much information about the Chinese side. Not many Chinese account books, I mean, in the tea trade were preserved, I guess. So that's a shame.
Yeah, thank you. So we are slowly coming up, I'm afraid, already to the end of our time for today's talk. So unless there are any final questions from the audience, or what remains for me is Dan, to thank you so much for taking the time to give us such a wonderful talk. I'm sure we're all even more excited now to see your book coming out on the topic, so that we can read even more on it. And also thank you for so patiently answering all of our questions. Before we wrap up, I should mention that the next Chinese Business History webinar will take place on the 8th of April, and we will actually stay within the China trade as a topic, because we will have Thomas Larkin of the University of Bristol talk about this research on Augustine Herd and company that actually came up in Dan's presentation today. So please stay tuned for that. We'll advertise it as always to our email list and on our website and social media. So please stay tuned for that. But once again, Dan, thank you so much for taking the time to talk to us. And thank you all for tuning in. And hopefully I will see you in the next webinar as well. So thank you very much.
Thanks everyone for your questions and comments.
Yeah, thank you very much.
Thank you.
Bye.
Bye, John. Bye, Gasan.
Bye-bye.